All right, everyone, let's just jump right into it. The crypto market just got hit with an absolute shockwave. And I really don't use the word historic lightly, but this was one for the books. Just look at this number, $20 billion. That's the high-end estimate of how much value in derivative positions just, poof, got completely vaporized. It was a massive, cascading deleveraging event, and it all happened in just 24 hours last Friday. And look, let's be super clear here. This wasn't just some big flush out. We are talking about the single largest liquidation event ever in the entire history of the crypto market. Now, to really put this into perspective, you have to look at the scale. The FTX collapse, which felt huge at the time, right? That was about 1.6 billion in liquidations. The COVID crash, 1.2 billion. This event was over 10 times larger than either of those. It's in a completely different league. It's not even the same sport. All right, so let's get into it. We really need to break down the anatomy of this crash, because right now, let's be honest, the market is in a state of absolute chaos. So here's what the battlefield looks like right now. Bitcoin absolutely cratered. I mean, it touched a low of $102,000 before clawing its way back to consolidate around that 111 level. And sentiment, oh man, it has officially flipped all the way to extreme fear. So that leaves us with three huge questions we have to answer today. 1, what really caused this? 2, why was the damage so incredibly bad? And 3, and this is the big one, could this counterintuitively be the golden buying opportunity of this whole cycle? So what caused this perfect storm? Well, it was a brutal 1-2 punch, and it's really important we separate the two. You have the external macro trigger, and then you have the internal weakness, the thing that turned a tiny spark into a raging inferno. The initial catalyst was a classic case of what you'd call macro whiplash. It came straight from the escalating trade tensions between the US and China, specifically that sudden threat of a 100% tariff. I mean, news like that, it just sends this wave of fear across all global markets. It creates this massive risk-off mood where everyone just wants to dump their riskiest assets first. And that right there perfectly illustrates why crypto got hit the hardest. The trade news, that was just the external shock. The real problem, the internal vulnerability, the powder keg, really, was the absolutely insane amount of leverage built up in our system. When the big money needs to de-risk and de-risk fast, the most over-leveraged assets are always the first on the chopping block. And this $20 billion liquidation, it's a painful reminder for sure, but a powerful one. Now, this is going to sound a little crazy, I know, but analysis from big firms like Fidelity suggests this wasn't entirely unexpected. They actually argue that we're in what they call the acceleration phase of the bull cycle. And what defines that phase? Exactly this kind of gut-wrenching, insane volatility. These moments, as painful as they are, often act as that final violent shakeout, the thing that purges all the excess leverage right before the next major leg up. Okay, so let's shift gears a bit and look at how this carnage was actually distributed, because, not every part of the market bled out in the same way. What's really crucial to see here is the divergence in performance. First, all eyes are on Bitcoin, right? Everyone is watching to see if it can hold that critical $110,000 golden cross level. Then you have Ethereum, which actually showed some surprising relative strength, probably thanks to its key role in stablecoins and everyone looking forward to the Fusaka upgrade. Now, as you'd probably expect, the altcoins, especially the meme coins, they got absolutely steamrolled. It was like a 2021 style sell-off all over again. But here's the real surprise. Look at Zcash, a privacy coin. It's had a near full recovery. That could be a sign that some institutions are quietly using it as a safe haven when they want some privacy. All right, so we've dissected what just happened. Now let's look forward. What comes next? Here are the key signals you absolutely need to be watching to see where the market's health is at. First up, you gotta look at the fear and greed index. It has absolutely cratered. I mean, it went into a complete free fall from a 74, which is deep in greed territory, all the way down to a 24, extreme fear. And, if you look back at history, these levels of extreme fear have often been really powerful buy signals for long-term investors. And that brings us to what is arguably the most important number to watch as we head into this week. Negative $179.4 million. That was the latest net outflow from the spot Bitcoin ETFs. This metric is really our clearest window into what the big institutions are thinking. We absolutely need to see this number flip positive to get confirmation that the big money is actually coming in and buying this dip. Yeah, and it's so important in moments like this to zoom out. You have to see past the short-term panic and remember that the long-term institutional drivers, they are still very much in play. You've got the new SEC chair, Paul Atkins, saying that regulatory clarity is his top priority. The Genius Act is on the table to regulate stablecoins, and that list of public companies adding Bitcoin to their balance sheets, it's still growing. The fundamental adoption story, the big picture, that has not changed one bit.
Okay, so let's put this all together into a game plan. How do you actually navigate this super volatile environment? Let's talk about some key risk management principles and exactly what events to keep an eye on.
So here's the bottom line. And obviously this isn't financial advice, but the lessons from that $20 billion liquidation event are crystal clear. Number one, reduce your leverage. Seriously, don't become a statistic in the next flush out. Number two, manage your cash or stablecoin position. Having that dry powder on the side when the market is this fearful gives you so much flexibility. And number three, when things get crazy like this, capital always flows to quality. So the focus tends to shift to assets with strong fundamentals, like Bitcoin and Ethereum.
Okay, so looking ahead to Monday, October 13th, there are two data points that are going to set the tone for the week. First, how does the traditional U.S. stock market open? How does it react to all this tariff news? And second, what does that end-of-day spot BTC ETF flow data look like? The answers to those two questions will be our clearest signal as to whether or not we've found a temporary bottom.
And that really brings us to the final and maybe most important question. Look, this crash was painful. There is absolutely no doubt about that. But you could also argue it was a necessary, even if it was a brutal, purge of all the excess in the system. So I'm going to leave you with this thought to chew on. Did this $20 billion wipeout just clear the runway for the next major acceleration of this bull run? I'd love to know what you think. Drop your thoughts down in the comments below, and I'll see you in the next one.